Well, good morning, John. It's good to see you again on this recording of The View. We actually had quite a big surprise coming this week, hitting the front page. The CPI was released on Tuesday, and the number came out, instead of expectations of 3.6, it came out at 3.8. And the figure that the Reserve Bank looks at, which is the trimmed mean, was 3.3, up from 3.2. Now, at the same time, expectations for interest rates in the United States have completely reversed, and they are now 80% expecting a cut on December the 10th. How do you make sense of all this, John, and what do you think it means for us and our economy, rates, and the market?
Big question, Paul. Look, it's a disappointing number, no doubt about it, and 3.8 is way above the band, and 3.5 trim mean is also well above the band. If you look at it today, our cash rates set by the RBA are below inflation for the last 12 months. Not a good position. America, on the other hand, has cash rates, 1% above their inflation rate. So they've got real interest rates. We have now negative cash rates. The result is, if you look across the bond market of America, 10-year bonds have lurched down just below 4%. Australian 10-year bonds lurching up towards 4.5%. So that 0.5% spread at the long end. At the short end, our cash rates are below US, so something's got to give. It's very hard to see the RBA cutting, given that inflation rate. Very hard to see the RBA cutting with the US interest rates above ours. So a few things have to happen. We have to get inflation down. We have to see interest rates in America come down. And we need to see some certainty regarding the cost of living in this country, because at this point, it's all over the place.
A couple of investment banks, I think Barrenjoey and I think it's UBS, are even predicting that the next move in interest rates, which might occur perhaps the middle of next year, will be an increase. So that completely reverses the narrative that has been so supportive of this market probably for the last 2 years. Does that hold any credence with you?
I don't think that's going to happen. Make a call on it. I think it's very unlikely Australian interest rates will go up. What needs to happen is Australian inflation needs to come down. Putting up interest rates, putting up mortgage rates would increase the cost of living, and that would go through to the cost of housing in Australia. It would actually make the situation worse, not better. Much better for the RBA to do nothing. Just sit where they are, see where the government can come up with some sort of fiscal relief. They have to look at the cost of energy, electricity. They have to stop indexing taxes on petrol. The government needs to run more efficiently to try and get the cost of living down. Reserve Bank filling of interest rates, which would have no effect. It may have an effect on housing prices, I'll give them that, but it would be a real burden on low-income families who have a mortgage.
John, I don't know whether you've seen the headline that the AFR has just released probably an hour ago, saying that APRA is going to introduce a limitation on the mortgage that can be borrowed as a ratio to income. So the debt to income ratio is going to be limited to 6 times. In other words, if you earn 100 grand, you can only borrow 600 grand. That'll be limited to 20% of banks' mortgages. At the moment, the ratio apparently is only about 10% of bank outstanding mortgages. Do you think that's a sensible development? I'm not sure if you've had time to read about that yet.
Well, look, something has to be done. I mean, I wrote this, I've been writing it for years. demand supply is one thing, but the access to credit is the thing that moves the demand curve up and cuts the supply curve at a higher clearing price. Very basic economics, which for decades the Central Bank of Australia has denied. Now, restricting credit will have its part to play in stabilising the cost of housing in this country. Now, it's uncomfortable for some people to try and get into the market, but it's better that they take their time and pay a price for housing which they can afford than to be pushed into the housing market taking on excessive debt to live in a house they can't afford to live in. So I regard this as an essential part of a restructure of the housing credit market, and I say it's about time, and more needs to be done in terms of controlling credit and therefore accessing credit by people who shouldn't be accessing it to buy expensive homes in this country.
John, you said in your earlier answer when we were talking about the relative rates in the US where they look certain to cut, and in Australia where they seem to be destined to sit on their hands for an extended period, you said something has to give. Is what's going to give the currency? Is the Australian dollar immediately jumped from 64 to 65, strengthened further today? What are the implications of that?
Well, it's a dead cat bounce, but it's exactly predictable. This is what traders do when they see that the interest rate outlook for America is to come down, the interest rate outlook for Australia is to go up or to be stabilised. So that's what you'd expect the currency to do. It's not a vote of confidence in the Australian economy. Meanwhile in Canberra, we've got the government now realising that the expenditure side of the budget is a little bit out of control, and they're trying to reduce expenditure across departments by 5%, and to do so without causing unemployment or reducing the labour force, which is pretty hard to do. Obviously the word's got out that the budget as set by the government is unsustainable. They've hired way too many people in non-productive parts of the public service. The NDIS is out of control. If the Labor Party or the government's going to do something, they need to do it now, not going into an election in 2 years' time. So this is going to be a pretty tough budget coming up in May next year. And that's what's going to give. It's the fiscal policy in this country, which is haphazard, to say the least.
John, let's switch gears a little bit and talk about the share market. In recent months, the forward price earnings ratio of the Australian ASX 200 reached a peak of 20.5. Today it's down to 18.5. So that's quite a big difference. Stocks like CBA, which we've spoken endlessly about, reached a peak of $192 a share. Today it's back down at $155. We're also seeing a pickup in some M&A activity. I see that Macquarie is bidding for Cube. There's some other smaller companies that are being targeted. Is the market more fundamentally reflecting kind of long-term value? Do you think there's going to be an uptick in the M&A cycle? Is this market starting to look a lot more realistically priced?
Well, the reason why the PE came down is because the market contracted, I think, from its recent peak by about 8%.
Yeah.
It's now down about 5 or 6 from its recent peak. So, the price of the market has come down. The analysts' consensus is still grappling with the outlook for earnings. That's a bit of a difficult one. Some of the recent AGMs have not been greatly positive, and we've had a couple of stocks get buried on AGM announcements. I suspect the PE is probably still around 20, Paul. I think when we get the real earnings for 26, there won't be much improvement. In terms of takeover activity, I think it's interesting. Macquarie Bank's identified a fairly strongly managed, predictable cash flow generating entity in Cube. Now, if we thinking about what's going on, as the amount of money going into super in this country continues to balloon, the identification of cash flow assets which may match inflation in terms of their business model, those opportunities are not great. There's not many. And it may be, and I don't want to predict what Macquarie's doing, but to take a company like Cube off the market, hold it away for 3 or 5 years, either split it up in terms of equity ownership amongst industry funds or bring it back to the market when the market is desperate for some sort of cash flow earnings in 3 or 5 years' time. This is what we're dealing with. We've got way too much capital in this country and too few great businesses. And it is a bit depressing when you see these businesses taken off the market, and I take my hat off to the team at Cube. They've done a fantastic job over many decades to build our business. And they started the restructuring of the ports in this country, if you go way back to the late 90s. Good luck to them. But here we are passing the parcel, and I don't want to be rude, but the great financial engineers, and Macquarie picked the airport cycle very well, as you know, it's in the airport, identifying a cash asset there. But these cash flow assets, at the end of the day, the consumer pays, and to generate a real return on equity, there's 2 ways you get your expenses under control, and I doubt whether Macquarie can do much better than the Cube management, who I regard highly. So it's got to come on the revenue side, and maybe its prices going up and the consumer wears it in Australia. So is this great news? Time will tell. I think we've seen for the airports that the consumer ends up paying way too much for basic services.
Yeah, Macquarie does have good timing though. We're both old enough to remember those battles on the with the stevedore union that Patrick had with the black balaclavas and so on. It was quite a tumultuous time for that industry.
Yeah.
Anyway, we're long past that, hopefully. John, what else did I want to...
I think we should talk about Parliament, Paul. I mean, here we are, what is it, the 27th of November?
Yes.
And the Parliament's trying to rush through legislation regarding the environment and mining permits and stuff like that, all bundled up into 1,500 pages.
Doing deals with the Greens, yeah.
Well, doing deals, but I make the point, well, maybe they should keep the Parliament open for another week. What's the desperate hurry to get it done today? And this is what's wrong with Australia. If businesses run like government and said, we're closing our business on the 28th of November and we'll see you back in February, the place would go broke. Yeah. It's not a good example to run a country where they are forcing upon themselves a timetable which is ridiculous. Get the legislation right, make the negotiations more public so everyone can see what you're giving away and what you're granting and what the deals are. But it's quite appalling. The politicians that desperate to go on holidays at the end of November, while the rest of us are working for the next 2 or 3 weeks. Admittedly, I'm not. I'm going to Thailand next week for a well-earned holiday. But I just sit there and watch this charade going on in Canberra and go, why are they doing this? Yeah. What's the desperate hurry? Get the bloody legislation right. Do the best thing for Australia, and probably they'd be better off dealing with the opposition rather than the Greens. Because then we'd get a national policy which the real parties of Australia agree to, and we don't have to debate it endlessly going forward. But that's just me thinking.
Look, there are 2 sectors, I think, that there really has to be a national consensus developed for a long-term sensible strategy. One is energy policy, which we've spoken about endlessly, and there still isn't a sensible, informed consensus. And the other one is migration policy. This is something that is so important for the country's future, and yet there's very little consensus. It's all based on, various extreme ideologies. I've written a couple of quick bites on the subject, but I really feel that our politicians have let us down on this front.
Well, I know we're going to end shortly, but, we immigrated well over 1 million people in 2.5 years. There was no debate in Parliament prior to that decision. Now they're debating after it's happened about what we should be doing now. Now, that's a complete debacle. What was Parliament doing? What were the governments doing? What were the bureaucracy doing when they designed an immigration strategy with hundreds and hundreds of thousands of people coming in? Yeah. And I did this, I talked about this recently at my presentation, and when you look at the immigration statistics, the thing that jumps off the page is the very low percentage of people with qualifications and skills. It's almost like we went around the skills base and immigrated everyone else we could.
Yeah.
Now, that doesn't make sense to me either. You know, Australia needs to reconfigure itself, probably preferably that we actually generate our own skills through the education system and not draw upon them. But at this point, because that's being so badly managed, we have to draw upon skilled labour coming in for our immigration program. Concurrently, we are immigrating a lot of unskilled people to do services, you know, or do jobs that Australians don't want to do for the pay that Australians won't work for. So it is a very big issue, and I congratulate you on your commentary, and people should read it. You know, Parliament is letting the country down. It's not debating the big issues, and we're not getting consensus. I don't believe there's that much difference between the right policy should be obvious to see. What are they debating in Canberra all this time? They're just point scoring, and it's not for the benefit of the country.
Yeah. Well, in the meantime, we're in the last dash to the end of the year. I think we're all hoping for a good Christmas and a bit of a retail lift for our shopkeepers out there and so on. And consumer confidence does seem to be holding up reasonably well.
Yeah, I think it's very much the immigration again. You know, we've immigrated a lot of people, and they've assimilated into the economy. They're consuming as you would expect. But when you back out the growth in the population, the real growth in consumer spending is not that significant, which is disappointing. It's growing, but it should be growing a lot more. But we have, with inflation, as we open this view, inflation's jumped up. It's going to force down real wages. You know, wages can't keep pace. Business can't keep pace with this inflation and pass on wages. There's a crunch coming. And it needs a coordinated strategy on monetary policy and fiscal policy and with APRA in terms of controlling credit. It would be nice to see a round table with some decisions made and a plan which is adopted by the country, and we can move forward. But we have to deal with overpriced housing. We have to deal with, you know, poor salaries going to low-income earners. We have to adjust the tax rates. We have to stop indexing, you know, government charges, which creates inflation. You know, the Australian government has to get down the cost of living or manage the cost of living so we don't get a wages surge, which will cruel the economy.
Yeah. Wise words, John.
The dogs are barking.
We'll have to go.
We'll have to go again.
And we'll see you next week.
See you then.
Cheers.
Right.